Anyway, we're going to get this thing started. As everyone knows, I like these panels, this session. We don't do pay to play. I know a lot of you and myself, I attend conferences and everybody pays to be on stage, and I hear a glorified commercial and I hate sitting through it, and I'm flipping on my phone all day. So that's why we believe, Andy and I kind of started this just getting together, telling each other our favorite trades, favorite ideas with other traders, and then it started small. Tom Willis, Rock, and the guys were at the first ones. Small group, and we've grown it into this. So I'm not going to hold back on the questions. For you folks on the panel, it could be maybe interesting, especially maybe tomorrow. There's some guys on some ag tech startups. I'm going to drill about where my money's at and where it's going. We'll probably, dive into some things today that may be controversial. I thought Peter was good. I may call BS on some of things.
I'll help you.
Exactly. I don't want to bust his ass. I mean, he just left the stage. And I would say it in front of him. There's just a few things I would question on some deals just because we trade a lot of weed. We trade a lot of corn and beans through the years, and we may know some things that I'm just uncertain about. Let's start off with Jacob. Jacob, you used to work with Peter at Stratford about 10 years ago. I know your views are a little different geopolitically. What can you tell us?
Well, first, let me just say thank you for having me. My grandmother was born in St. Joe, so this is a bit of a homecoming for me to come back to Missouri. Well, my first time in Missouri, so there you go. And yes, I was making coffee at Stratford when Peter was sort of one of the biggest voices there. So anything I'm about to say, take with a grain of salt, because my career doesn't exist without guys like Peter trailblazing. But I do see the world a little bit differently. And I would also say, Kevin, I loved your emphasis on intellectual flexibility. One of my favorite quotes is the F. Scott Fitzgerald quote that the sign of intelligence is being able to hold contradictory ideas in your mind at the same time. So I'm offering you some contradictory ideas in your mind. I don't want them to replace the ideas that Peter presented to you. I want them to live in your brain itself, and for you to use your own lived experience on your farms, on the ground, and see what you're seeing and move from there. I think the biggest issue that we have to think about in the world today is, what does the global macro system look like? We've been in a unipolar world order for the last 30 years. That's just a fancy way of saying the United States has been the dominant military, economic, political, cultural power in the world for the last 30 years. That's changing. I don't think we're entering a bipolar world. I don't think we're going towards Cold War 2.0. And I don't think we're going towards global anarchy or war. I think we're heading to a multipolar world system. And the last time we had a multipolar world system was the 1890s. That was a time of rising and falling great powers. It was a time of incredible technological innovation. We're all talking about fertilizer today. Fertilizer advances really start in the 1890s. You begin the 1890s with horse and buggies. By the time you get to the early 1900s, you get cars. I'm expecting that kind of technological innovation and change amidst a lot of what's happening globally. Now, the scary part of that sentence is that the 1890s was followed about 20 or 30 years later by World War I. And that's the monster waiting at the end of this trajectory. But right now, if you're Joseph and you're interpreting Pharaoh's dreams, and there's 7 years of plenty and 7 years of famine, this is the 7 years of plenty. This is as good as it's going to get. I think there's a lot of opportunity out there and a lot of pockets of the market if you are brave enough to go and seize it. And that would sort of be my general message. The only other things that I would sort of put in your mind, because I don't want to monopolize the time here, is just I'll tell you a different story about China and about Xi Jinping. The Xi that Peter described sounded to me like Chairman Mao Zedong, not like Xi Jinping. Xi Jinping grew up, his family actually suffered from some of Mao's purges. He knows firsthand what it means when a Chinese leader ignores all the data and information in front of him. Xi is a very popular leader in China. He's popular because all those guys that he eliminated, it's not that they were smart, they were corrupt. They were stealing money from normal Chinese citizens. Now, Xi has an incredible challenge in front of him. Peter didn't mention China's real estate crisis. That's my number one flashing red problem in the world this year. What is China going to do with its real estate crisis? If it can get through its real estate crisis, I think we're looking at an actually stronger, more muscular China going into the middle to the end of the decade. I can make the case either way, but that I think is where we need to focus. Where are Chinese real estate prices going? They've been going down for months. Most Chinese people, when they are investing their money, They don't put it in bank accounts. They don't put it underneath their mattress. They don't put it in the Chinese stock market. They buy real estate. They buy condos, in part because China has no real estate taxes. Big authoritarian communist country, no real estate taxes. The last thing I would just say is that in a multipolar world, you need to think about food prices, and you need to think about other countries that are going to profit from that multipolar world. So when it comes to food prices, from Malthus on down, for hundreds of years, people have been saying that we're going to run out of food, that there's going to be global famine, that we're not going to figure out a way to make more food. That hasn't been true for 300 years. Now, that doesn't mean that it's not going to be true. Maybe we're finally going to be at the end of the rope. But for 300 years, if you were on that side of the trade, even though there were certainly moments where it seemed like that was what was going to happen, you were going to be wrong. So I wouldn't underestimate technology and human ingenuity to increase agricultural yields. I also wouldn't ignore the fact that we waste between 20 and 40% of the food we grow just because of logistics and disruption and being wasteful with things in general. If you just eliminate 10%, 20% of global food wastage, you might actually have more food on the global market. Maybe you're not looking at that sort of cataclysmic scenario. And in this multipolar world, I don't think it's just you're going to park your money in the United States and you're going to be great. If you're thinking about investing in the long-term horizon, generally in multipolar worlds, you like countries that are strong enough to stand up for themselves, that can build economies of scale in their own regions. So I like countries like Brazil. I don't think Brazil's in trouble at all. I see Brazil, I see a young entrepreneurial class rising, demanding more accommodative monetary and fiscal policy from their government. I think Brazil is primed to do great in the next couple of years, and they're a competitor. If you were selling corn to China in the last couple of years, you know that Brazil is a competitor because they just got approved to export corn to China in this next year coming up. Soybean farmers also will probably feel that. Other countries that I'm really bullish on are countries like Mexico, like Turkey, and I think the European Union is a rising power as well. What happens with the Russia-Ukraine war will basically decide that. So I won't take too much time, but that's sort of the world that I would tell you is coming to fruition. We're seeing that multipolar world, and you need to be nimble enough and identify those key risks and see which direction they're going to go as things pop up.
Yeah, I appreciate that. Everyone on the panel will be around for the conference, so you guys can talk to them, ask questions, and things like that. So Jacob, we appreciate the input on that side. We brought Emily in. Emily's one of the foremost authorities on China, Princeton grad. I've heard some great things about Emily, and I was curious to pick her brain. With China being our number one export for a lot of our agriculture, it's critically important we get a better bead on China. So Emily, tell us the real scoop on China from your perspective.
If you've heard good things about me, I should probably just leave now while I'm ahead. In China, there's signal and there's noise, and I generally treat the political environment in China as noise. The CCP is cemented in power. I think Jacob painted that well, but also look at the reality that they've given the people growth and really remarkable growth, and have painted a narrative of China growing at a rate that far exceeds a declining U.S. I think that goes a long way to meaning that the political chaos in China is a blip or noise. The signal that I see is the industrial policy that China deploys, and a really deliberate industrial and therefore geopolitical effort to ensure that China depends as little as possible on the international system, and that the international system depends as much as possible on China in key industrial areas. And the goal of doing this is so that China can have greater leverage and can coerce. I think agriculture is the prime example of this. This is a field where China has real dependencies. China is the number one importer, obviously, of corn, of soybeans, of barley in the world. At the same time, China is working very hard to shore up that dependency, to make sure it's not linked to only one global player, but it has diversified sources. And at the same time, to build the rest of the world's dependence on China for agricultural inputs. How is China doing this? Domestically, by developing and stealing advanced technology, whether that's in seeds or in agricultural machinery and equipment or in digital ag, in order both to boost productivity at home so that there's less dependence, but also to build dominant positions in nodes of agricultural value chains, again, for the dependence purpose. At the same time, as China puts it, go out of their international agricultural policy. That's the effort to support Chinese companies in going out into the international system and buying up key agricultural assets, whether that's an important shipping port for ag or that's farmland in the US. Brazil and Argentina have been major targets of this, but so has the US, evident in, for example, purchases of agricultural land, which have skyrocketed over the past decades. Beijing bolsters this effort with major subsidies, also with stolen technology, and with a deliberate industrial policy. And the goal is, in a very short term, market share, food security, decreased dependence, but in the longer term, it's trying to control the agricultural sector and therefore trying to control any entity that depends on that, which is to say the geopolitical system. Make sure that the rest of the world depends, which, I won't meander on, I think this will be a question later, but which means that we can expect China to start competing much more aggressively in ag, both in terms of companies and in terms of using it as a geopolitical battlefield. One other thing I want to point out too in terms of what's going on in China is the China-Russia nexus. I think it's important as we look at Russia and Russia's invasion of Ukraine to acknowledge that China and Russia are working together. They are strategic partners. And that means that China can access cheap commodities that Russia can't sell elsewhere, including ag-relevant ones, but also that China is making sure that Russia does its bidding as a spoiler in the international system. These aren't individual agents who are just pursuing their own totally separate goals internationally. They're very much unified, and they're very much pursuing a deliberate policy that's intended to unseat today's incumbent hierarchy.
All right. I'm sure we'll have some questions on China as we move forward. Let's switch some gears up. We got Eric Snodgrass in. As we all know, weather is critically important for us as we're going to try and hammer down here how we're going to price corn, beans, and wheat, cotton, things of that nature. So what are we seeing, Eric, second half? What's going to happen here in South America, weather? What are you looking for? How about the U.S. here moving forward into the next year?
Well, first of all, I just want to clarify my pronouns are chubby dad and weather nerd, so just to make sure everybody knows that. There's big questions coming out of South America right now, specifically in Argentina. There has been a lot of discussion about drought issues in Argentina. We've seen delays in planting, and a lot of the satellite imagery would suggest very low plant health. But a lot of times you got to remember when those satellites are staring down, if they see dirt, it looks like unhealthy plants. So that's part of the planting delay that's going on. Got some rain last weekend, and now it's going to be 5 to 8 degrees Celsius above normal. It's the equivalent of July there right now. And not much rain forecast for Argentina for the next probably 10 to 15 days. So if there's going to be an issue, I think it's going to be there, or maybe in Rio Grande do Sul, down into Uruguay. Brazil has been hitting on all cylinders. They were fast to plant this year, which is critical for the success of both crops, and there's been rain. And they can get 5-6 inches of it a week this time of year, and they rely on that given the soil type in that area. So we just think about where this is going to go. This means the likelihood of hitting some big targets on soybeans is legit based on weather alone. I haven't seen anything that would make me say otherwise for Brazil, and likely to be able to cover deficits that have happened in Argentina. I think the big things we'll be watching going forward, not just in this next year, but beyond that, is that we have a fading La Nina this winter. That'll also affect South America even more directly. The faster that fades, in other words, we get rid of all that cold water in the equatorial Pacific, the better the chances are that Brazil could have some trouble with the safrinha corn crop, which we expect to be huge. The longer term things I think about with South America, just big picture, looking out years, we've noticed some significant changes in the arrival of the monsoon in October, November, and the later that arrives, which is what the trend has been, the tighter it compresses their planting windows and then harvest windows and then safrinha crop. This was not the year for that, but the longer-term trend suggests that. And just there's been a few studies that have come out lately talking about how big Brazil can go. And there's some estimates out there that should they decide to convert more of their pasture land over to farmland, there's another 400 million acres to be put into production. So that's more than 2 more Texases that are there. So right now, big soybean crop. I think if there's going to be trouble, it's going to be in Argentina, and we need to watch out for that safrinha crop if there are drought issues with getting rid of La Nina.
How about U.S.?
Well, the U.S.
long term. We're going to hold you to it. Too.
Do that. You should hold me to it. It's fun trying to predict nonlinear dynamic systems that and exhibit chaos. You do it all the time, right, in the markets. So there you go. So thinking about the United States, the biggest thing going on right now is the flooding in California. So there's been multiple years where there's not been any moisture in the winter, especially last year. They went 3 months with nothing. Now they just got 2 feet of rain. And I was talking to my daughter about this. She's 13. I said, honey, we live in Illinois. I said, if we would have got that, first of all, that's more than half of our annual rainfall. There'd be no dry ground. It's just incredible how much moisture is coming in there. But 40 million people leads the country in the production of 40 different fruits and vegetables and milk. So we got to keep an eye on that. The biggest issue on the other side of the Rocky Mountains is the harder winter wheat belt, just dealing with long-term issues of drought. Over the last several weeks, there's been places that continue to get nothing, whereas it's been very snowy and wet to the north. That's all good. That's going to get into the soil. We were at a peak of about 85% of the lower 48 in drought. I imagine that number will be below 60% going into spring. If we lose La Nina, this is critical. This is one of our only long-term forecasting metrics. Okay, so if we lose La Nina and build in even weak El Nino conditions by spring, the 2 things that happen are very tight planting windows for much of the Midwest, because we just seem to get a lot more routine precipitation. The jet stream sits right over the top of where we'll be right now. And then, but that could set us up for a big year next year just by replenishing the soil moisture. Overall, I'm optimistic about next year in terms of production, but how that plays out in the markets is, of course, still yet to be determined.
Yeah, for everyone, I'll get to Mike here, Mr. Mock. We're about 80% sold in old crop corn and beans, 30% new crop. Sold in wheat, about 55% new crop wheat already priced. So I think most of you know how I price. I try to price first 30 to 40% pre-planting, and then we'll price, the next, hopefully, if the market allows for high enough prices to lock in a decent gross profit, we'll price the next 30% during the growing season and then try to store and price the remaining 40%, we got a year basically then to price. Now, for some of you who can store the whole crop, you're going to have probably a different outcome. For some of my friends down south, they don't like to do any trucking through the winter months. They do some other things, so they don't like to truck. They like to sell a lot more aggressive earlier. So, I mean, you're probably going to have to obviously tailor those things to your needs, but I like to divide it out like bullets. You've heard me talk about it before. I like to look at it like I'm shooting, hunting. And those are the different seasons. We got the South American growing season, the U.S. growing season, and then what we have in storage for a whole nother year. I divide those bullets out and shoot them accordingly. When the ducks are in the air, I pull the trigger. And, I'm probably never going to price a great deal at the high, but I'm never going to price a great deal at the low either. So it's more of a blended approach. Mr. Mock, you've been doing this a lot longer than I have. Give me some worldly wisdom.
You're an
sir.
old guy.
Yeah, too darn long. Yeah, I'm going to be 69 next week, and that hurts.
Happy birthday.
I agree with you, Kevin, and I make a point. I get your material, obviously, I'm an avid reader, and I avoid your advice except for once every 3 weeks. I want to see where I compare. And we've lined up pretty well. I think we were aggressive sellers of old crop early and often, and I would tell the crowd here that I don't see that on a national scale. I think the farmers made a huge commitment to staying long old crop corn in the bin. That's got me worried. There's more beans unpriced, although a lot of that is in unpriced basis contracts. And I don't see a lot of plans in place as to where I'm going to market that, just exactly when, and especially with pricing basis contracts. You get a call late February from the cash merchandiser say, we got a price or roll. Well, that's the day they price. And that's concerning to me, Kevin. I think $15, I agree a lot with what Eric said about weather, by the way. Brazil, Paraguay, Bolivia, they're going to help outweigh the problems in Argentina. $15-ish old crop beans are too high priced. Folks should have it cleaned up. My Monday morning comments strongly encourage liquidation of remaining old crop inventories. Let's focus on new. And I think that's a key issue. I do worry about this commitment to the length. I don't need the money, therefore I'm not going to sell, as opposed to locking in extremely good profitability. And I think in this environment, the one thing I would take away from what the folks have talked about already, I do think volatility is with us and going to stay with us for a while on all sorts of fronts. And so it's an environment to avoid swinging for the fences. Kevin and I like to talk sports. Don't try to hit the grand slam home run. lots of singles and doubles. I know that works against a lot of folks. They want to hit the big one. I just think this is the wrong time to be doing that. I agree. I love the future prospects for the Mexico-Canada-U.S. trading relationship. I'm very fearful of Brazilian competition. I think it's hard for me to get a bull market started at 680, 670 front-end prices in corn, $15 prices in beans, without the help of China, and in a big way. And if COVID, their ability to reopen is hampered by the problems with COVID, then perhaps a 98 million ton import number on beans is too big. They're using 18 million tons for corn. I've seen some folks on the commercial side using 15 or even lower. So my focus is getting the old crop cleaned up and nibbling away at the new crop in the way you mentioned. One quick thing I'll wrap up, because this is more of and Andy and Kevin always like to talk about trades. I've been concerned personally, at my age, I got to be careful, and the geopolitical situation. So what I looked at, energy is a place to consider, but we had such a good run last year. My focus has been on the defense and aerospace industry, and whether you pick a name like a General Dynamics or a Raytheon, I don't know that I'm the greatest stock picker, but I do like an ETF, ITA. That's the way I'm hedging some of the risk that people like Peter or Jacob or Emily might talk about, because I do think that countries across the globe are going to spend a lot more money on defense, at least in the foreseeable future. That's what I got, Kev.
Yeah, that makes a lot of sense, Mike. I appreciate it. I would agree. When I first started in Chicago, I remember some old traders telling me, man, you're going to have a hell of an advantage. And I said, why would I have an advantage? I don't know anything. I'm young. I don't know anything about this business. I said, man, a lot of farmers back from those small town you're from. They're like, just do the opposite of what they do. They're like the worst traders there are.
Ouch.
And I said, ouch. I remember that. I was like, whoa. And I always told you guys the reason I believe that we're probably are some of the worst traders is just because we have too much emotionally tied to it. It's where our families grew up, our kids, their kids, and none of us want to wreck the heritage and want to wreck the lifestyle of rural America and what we have and what your parents have built and their parents and their grandparents. So it makes pricing much more difficult because it's much more personal than when you're just doing it as a business or a business strategy. So I'm with you. It becomes very, very difficult. What I worry about this year is I've talked to a lot of farmers and everyone are like, yeah, nobody's going to let go of their corn this year. Man, corn's tight. Corn's tight everywhere. The basis is hot. Corn's tight. Yeah, what happened? Oh, man, we missed it last year. We missed the big run last year, so we ain't going to let it go this year. Okay, we know how that story ends. We've seen that, like Mock said, 1,000,000 times. I would be hesitant here now. I'm with Mike. I would be careful holding on to a great deal of old crop. Sure, as I say that, we'll be at $8 corn, right?
Kevin, we lost 30 cents just since Friday's highs.
Yeah, and I hear you. And I priced some over our break. Michelle was like, what are you doing working? I said, I got to price some more old crop. And we put out a report, and we priced more into that, like you said, Mike, into the rally. So I'm worried. Let's put it that way. I do see what Peter's talking about, possibly, some things happening with Ukraine. I think Ukraine exports are overstated. I think Russia may be a little overstated as well, just because logistically, I don't know if they'll pull it off. So you may keep some gambling stock. I'm with that. And I know some folks in here are obviously big gamblers, or you wouldn't be in the seat you're in today. So I tip my hat to that as well, and I respect that. I'm just telling you my opinion. I think you want to shed some risk or try to reduce some risk on every rally here, because you're just, you're getting to a part where it's going to be South America. They're already harvesting beans in Brazil. So you've got the combines rolling. We're only maybe 1% harvested, but you are moving. And I think before long, you lose the weather story. And if you lose the weather story, they're going to suck the weather premium out. And we may get another weather story again, but the markets are calloused to the war story, and those war headlines aren't really getting much bite anymore. So we'll have to have a new catalyst for the bulls. Like you said, big bull markets require a lot of food.
Kevin, I don't know where you have me slated, just because the thought, and while we're on the topic, I said this at last year's conference, and I'll repeat it again this year. Those concepts that Peter is talking about are extreme volatility. And volatility right now is mispriced if he's right. And if you recall what happened with the invasion with Ukraine, et cetera, we got the story in the markets around February that a lot of the petroleum and crude producers were taken to the wall. Why were they taken to the wall? They were taken to the wall by their hedges, right? Hedging can bankrupt you. It absolutely can. And so if Peter is correct in what he's saying, there's potential for explosive volatility. I worked under a trader who said to me, war is never good for demand. And there certainly is truth in that. But if we're destroying a large part of Ukrainian production and Russian transportation systems and all that Peter enumerated, that is potentially explosive. And my only point, and it's, if for those of you who were here last year and heard what I had to say, my point is your short futures position is an obligation. You have an obligation to the Chicago Mercantile Exchange. And you need to take that obligation very, very seriously. When we had the Chernobyl event, I wasn't trading at that point. That almost bankrupted a couple of the majors as well, because the market couldn't price for a very long time, and it wasn't going down, it was going up. And Kevin, I didn't mean to sort of just wanted to build on what you were saying. My advice to everybody last year, I'll repeat. Get very familiar with puts and calls if you're not familiar today, and rethink your risk with futures. And I would really explore that, because I'm sure we have very qualified traders. Probably a lot of you are in the expert class of trading. Just take your short futures position as your hedge against your grain inventories very, very seriously, and have something that helps you exit that position. Be short of futures. Maybe just go buy a deep out of the money call against your short futures position. Have an exit point, because if Peter is right, and the basis of the thinking that the caution I'm trying to urge you, if Peter's right, then things, they go out to the tails, right? And that can be extremely, extremely damaging to your financial situation. So be very familiar with puts and calls. The best way to hedge your positions in this environment is the use of options, and they're very cheap right now. Volatility, pardon me, is extremely cheap. And Kevin, I didn't mean to jump in on that, but
No, I totally agree. I mean, I think that's what Andy and I have talked about several times through the last 2 or 3 years. We haven't made near the money we thought we should have made, just because we've had to trade so small. I mean, because the volatility will rip your face off. And we're all in a commoditized business, and you got to be a little bit hesitant here and just be a little cautious. I think there's tons of opportunity, but as Walter's saying, the volatility could catch you leaning the wrong way, and next thing you know, you're sitting on all of last year's crop and part of the year before's crop, which I know people that are. We catch a major something crazy comes out. I mean, it's going to be lightning fast the way this thing moves. So I totally agree. So, I don't see any difference there. Andrew, let's talk Andrew O'Donnell. What are you seeing? What are you seeing happening in your world? Andrew does a lot with mining and doing some different things with fertilizer and mining. What are you seeing?
Well, I'm glad to be the token Canadian here. I hope you don't hold it against me. From the wonderful socialist lands of Canada. It's great that you started off the conversation and also you about having contradictory opinions at the same time. I get to have my thesis challenged every day. I live in Vancouver. It's very far left. And with that, you're forced to look at things. and I always kind of think being smart is great, but being curious is probably better. We focus on this shift that is happening. There is an energy shift, and like energy being the core foundation of any country, same with food resources. So we look at those, and we don't trade. We look specifically at the equity markets. We work with family offices and funds, and we look for specific commodities that play a crucial role in technology and energy moving forward, but we do it pragmatically. So right off the bat, I'll tell you, we invest in oil and gas. This idea that we can just stop using oil and gas is beyond ludicrous. We come from the point of view or perspective of why can't this conversation be had? Why can't we get, say, Germany stop using coal, or China, or India, or Africa, and get them to use natural gas? That alone, if you were very concerned about a carbon emission, would be so significant. It should, in theory, make people on the left happy. Why isn't that an option? We try to look through the political side as well as the fundamental question of, can we just do things cleaner? And that's fine. I'm all for it. Can we do some of this push with EVs and batteries? What's that take? 50% of the cost of a battery is your minerals. People don't realize in a Tesla or any of these, it's 48 kilos of copper. Well, where are you getting your copper from? Where are you getting your nickel from? Now that Russia's off the table, they're a major producer. Norilsk is their kind of main producer of nickel. We're lucky in Canada. We're a strange country that is massively resource rich that pretends it isn't. We've got some strange leadership. We hopefully are coming out of that. And we're getting some good indications that if we have the change that's required, there's a lot of money not only in mining, because once again, this green shift, this requires enormous amounts of metals and mining. And by 2025, we're talking, it far outstrips the demand. Where are we going to find it? Canada can play a major role in that. Some of the headlines you'll hear is like rare earths, things like that. People might think, well, what's a rare earth? It's not rare. There's tons of it in Canada. What it's crucial in is in magnets, so really high-powered magnets that go into non-combustible engines, for one thing. Also, rare earths go into a lot of missile guidance systems. 90% of that or so of the production is in China. China dominates a lot of these commodities, not only in usage, but in their actual build-out. They are light years ahead, assuming this transition, take out the politics of it, and we think that they're very serious about doing it. They are way far ahead. Not because they're technologically better, but because they've had the luxury of not having any scrutiny. Most of the targeting of the climate discussion, I'll use Canada as an example, is about how terrible you as an individual are. You're not doing nearly enough. You're the problem. And so Canadians will virtue signal hard that they're biking to work and they're not doing this and they're recycling. And I'll remind them that if you turned off Canada, all of it, cars, industry, everything, you'd barely have any impact on carbon emissions. All of Canada. But that they don't think that that's true because, unfortunately, some people like to come with data, facts, statistics. Most people prefer a narrative. And the narrative has been dominating lately. And we try to find the pragmatic realization that whether it's BlackRock or Goldman Sachs or Vanguard funds, trillions of dollars saying this is where we're going, we say, okay, well, what's the likelihood of it? Where's it going to come from? And knowing we've got supply chain issues, knowing that that's going to be a problem moving forward, knowing that this BRICS association seems to be getting stronger, that there is obviously a great need for trade between countries, but this idea of a monolith globalist structure is probably not going to come to fruition, is where's the best place? And for me, my perspective is the leader of the West being the U.S. Where's the best place for the U.S. to still dominate? And it would be, and I agree with Peter, is that to look to Mexico and to look to Canada. And one good sign we've seen of that is just in the last few weeks is the U.S. Department of Justice, Department of Defense they're looking to Canada, and they're going to grants. They've got open grants to mining companies in Canada. We've had a critical minerals list in the U.S. that hasn't been met. That's you've got one lithium mine in all of the U.S. We focus on not only lithium that can come out of like brine, so out of oil and gas fields. There is direct lithium extraction technology. We look at these types of things. That would be a thing for Alberta to really kind of emerge. Once again, not only being a great focus for oil and gas, but also as a transition, if we're able to. And when I say like transition from oil and gas, I don't mean that we're never going to use it. That's a strange idea that some people seem to have. Is if you look around at the amount of products around the room that have oil in it, and also once again, if you just went back to the thesis of could we convince a developing nation to use natural gas instead of burning wood or say coal, that would be a giant leap forward. And we do that. We look at all these things, and I'll mention one other thing before taking too much time is with Agritech, we're interested in potash and we're certainly interested in phosphate. And this brings up an interesting, and I'll just say this with phosphate. We have two properties that we're invested in Quebec that have very high grade phosphate. And this is very unique to the area. And once again, mining is like viciously under invested in and forgotten of for years and years and years. And as a sector, it's very small in comparison to energy or anything else. We think because of that mispricing, there's a huge opportunity. But also with this phosphate story is they have the opportunity because of the way the battery story is going of this high-grade phosphate can actually be used in lithium iron batteries. So phosphate can replace cobalt, which you'll often hear cobalt being the terrible story out of the DRC, which is tough. It's horrible mining there, where people are saying, all right, maybe we'll make less fertilizer. And phosphate is key to fertilizer. Maybe we'll make less and we'll put it towards building batteries. And that brings up an interesting point that Peter made where people are going to have to then go, well, should we sell our property and sell our goods to a battery maker, or should we be making fertilizer for food? And that's a very challenging question for people to have. And with our site, we look at all these questions. Most of it's free. We just have it's educational. My goal is to get people excited about mining. It can be done in a clean, surgical way. Doesn't mean it always is. We always hear the big bad stories. But if they're going to pull this off, and whether or not it succeeds or not, they're going to do it. It requires the amount of mobilization of mining that is going to be shocking. And we're just starting to see it. The Germans came over to Canada looking for hydrogen projects, and they were looking for critical minerals. They were also looking for natural gas. Canada wouldn't give it to them, even though we could have. So they went to Qatar, signed a 10-year deal. I'll also mention this because Peter had mentioned it. We look at other interesting things like helium, because once again, helium isn't party balloons. We like that narrative of, well, what do you need helium for? It's a high-tech coolant. So not only do you need the neon for your semiconductors, you need helium for data storage, all that. It cools all the computer processing power down. And they are the only first primary producer. And they're they're Canadian listed, but US company. And they're right in the Holbrook Basin. And guess what? TMAC, or Taiwanese Semiconductor, is building a massive plant in Arizona. So we look for these types of synergies that make sense and try to also, once again, make sense out of this very hot topic, alarmist kind of idea with the pragmatic, where can you make money moving forward? We're long-term investors. We don't trade. And we look at these major themes. And once again, not only is it critical thinking that we always want to challenge people is if I'm forced to reevaluate a position and it makes my position stronger, well, that's integrity. That's great. If not, and I have to question it, well, okay, I've learned something. But we feel pretty confident in what we're looking at. And once again, whether the outcome is correct or not, we know that this push is happening, and we see that there's a huge opportunity in that.
Yeah. What if we're going to make this big push to green and we're going to have to develop more mining? Is there mining opportunity untapped here in American farmland?
In the
Across
U.S.,
the US?
yeah, the U.S. is pretty tough. Like
Regulatory issues?
massive regulatory issues. Canada has that too, but one of the obvious answers, and people get it comfortable very quickly, is nuclear. If you are serious about the environment, nuclear would be the answer. There are small modular reactors that one can use. Rolls-Royce makes some pretty amazing ones. We'll leave the whole fusion out of it. You know, there's been a major breakthrough there. But the joke with fusion is that it's always 10 years away. It's been 10 years away since about 1956. I think that what they have done with it is impressive. They've put energy in and got more out. They're claiming it's 7 years off. And if that's true, well, guess what? Energy problems are done. You know? And listen, if it's true, and there's no one better that I would want to have it than to be the Americans solve that problem. That came out of, I think it was the Feldman Labs in California, but MIT is working on a massive project themselves. But make no mistake, China is trying its best to solve that problem too. But in the meantime, I would scratch my head for the last 4 or 5 years and say, okay, we've got Justin Trudeau, who's the most virtuous green person on the planet. Why are we not actually instigating any policy in any way, shape, or form towards meeting this? And that is a tough question, which we're lucky in my space. I get to talk to every CEO of mining companies that I want, having been in Vancouver. We have the videos, we do interviews with them all the time. We post them on our website and on our YouTube channel. And I'll ask them, either on camera or off. I'll go, well, what is going on here? And they usually just say the same thing. Well, they're politicians. They don't know much of anything. And that's, not, pulling any punches, but there isn't a cohesive plan that makes any sense because, and I'll just finish with this. If you're looking at mining, this isn't like you can drill a hole, put your straw in, and there's natural gas to come out. This is pinpointing some sort of ore body in a mountain, possibly, and then extracting that. It's about, on average right now, it's 17 years to get a mine operational right now. That's too long. Even if you got that down to 5 years, and you said, well, we're stopping all oil and gas, there's no energy. Well, where are you getting your lithium from? Where's the backup for this? Where is this story? So there is a massive disconnect with the story and with the reality. But if you're going to do it, and if it's going to come from somewhere, and they're making the indications now with the Department of Defense is saying, we're going to fund you. We're not going to loan it to you. We're not going to become equity partners. We're going to grant it to you. They're looking at 70 different Canadian projects. And that also solves another problem, and you can come ask me after.
Yeah, let's ask after. We're going to move on the mining. No, we're fine. We're cool. Walter, touch base with us on the biodiesel. What's happening there?
Renewable diesel.
Renewable.
Yeah. Come on, man. Come on. Let's get the nomenclature right. Okay, I'd just like to fix two things. Peter walked in and started his speech, and he asked how many producers are here, and I was back over in the corner there, and only like 3 people raised their hand, and I'm going, wait, what? So how many farmers, if I use that word, how many farmers do we have here? Okay, I thought so. Okay, and how many soybean farmers? Again, it's probably all right. So, all right, so check, fixed. Then the second thing, we're going to have is Peter still here? I've got to be careful if he's got a knife or a gun or something. But we're going to have a conversation about ethanol. I mean, I'm a recovering ethanol executive of a publicly listed company, and so spoken at conferences and things where people who don't really know a lot about ethanol have an opinion about ethanol. First of all, and should move very quickly. Consumes 40% of the corn crop, but 1/3, so a bushel of corn goes into an ethanol plant, 1/3 becomes the alcohol, 1/3 becomes CO2, which just goes up the stack. It's one of the reasons the industry doesn't make any money. And then 1/3 becomes dried distillers grains with solubles, which you feed to ruminants. It's 38 million metric tons of mid-proteins. 38 million metric tons. So really, we're going to end ethanol, and all of a sudden, I mean, the price of soybean meal goes to $900 a ton? I mean, it's just the thinking, people don't understand the impact of ethanol. Ethanol is here, it's here to stay, it's not going away. We're not going to have a conversation about it. It's a critical component of the U.S. economy. And then the tipping point, wait, you're going to take away 10% of the U.S. gasoline supply? Where are gasoline prices going to go then? So anyway, my rant is completed. Okay, on to last year. How many attendees were here last year? Okay, so a lot. How many remembered my rant last year? A couple. Okay, I get it. All right, so I asked you to consider a commodity that you may not have on your screen, and that commodity was soybean oil, right? Because I said we're in this amazing dynamic right now of renewable diesel. And so last year, if you recall, just quickly, we had Phillips 66 enter into the soy processing industry in a deal with a co-op, Shell Rock, in Iowa. Then, as I said last year, a head-scratching deal, Marathon gives ADM $75 million to build a plant in North Dakota. I mean, it's $75 million, you know? It's like Marathon. It's like 1 Mississippi, 2 Mississippi, 3 Mississippi. Oh, Marathon just made $75 million, right? I mean, they make $75 million every half minute or something. So it didn't make sense. Both companies said there will be more coming, but nothing more has come. So it's still sort of like, what's that? And then we have this blockbuster deal of Bunge and Chevron, $600 million. And Chevron made a major investment to build out 2 brownfield sites, Destrehan, Louisiana, and Cairo, Illinois. The process around renewable diesel is enormous energy both from the refiner and from the soy industry producing. But really, the refining industry came and kicked the soy industry in the butt and said, let's go. What are you doing? Start building these things, right? Kind of strange because the majors, the Archer Daniels, Midlands, the Bunge's, et cetera, they could see renewable diesel coming, but they weren't moving. So they got a kick in the butt from the refining industry. And we've got this enormous energy moving forward of combined coalescing around renewable diesel, right? Everybody, I think we're all students of the game. We know this is going on. And it's the first time in the history of big agriculture and big energy coming together to work for joint development. Ethanol, awful. I gave the stories last year of trying to go down to Houston and take guys out for dinner. I'm a senior executive from one of the largest ethanol producers. They have no interest. You know, it's like there's not a supplier-customer relationship. There's a mandated business over here, the fuel industry, and then there's the ethanol producer. And quite frankly, there was nothing but tension, no joint anything. Biodiesel's had its issues as well. But renewable, and I won't get into those, but renewable diesel is this great intersection between big energy and big agriculture, and to the benefits of all the producers here in the room. And then the EPA just drops this bomb on us at the end of November, right? And says, let's stop this development with an allocation of volume obligations that has no growth at all. Very odd. And so, as Kevin and I have been talking about, next week there are hearings and then submissions through February, and then they have till June to sort of come back and say this is final law. So that's what we're in the midst of. Pardon me 1 second. What's interesting to me, and this is something I'd like you all to think about. Okay, so EPA drops a bomb on all of us. I've talked to many people. Greg, I hope you'll give some input on this because Greg's a Washington and a policy guy, and I'm not. I'm a trader. But from all the people I've spoken to, no one saw this coming, right? The EPA went 2 ways. They really reduced the growth of renewable diesel. Ridiculous, no growth at all. And then the introduction of e-RINs to support a RIN, the entrance of electrification of the fleet, getting a RIN, getting a federal incentive for growth. What's interesting to me is that you as a grower have got a participation in this. And I'm going to say to you, full steam ahead with your planting intentions, et cetera. Don't let this interfere with your thinking. Why is that? Well, because you're going to get, it's unfortunate the way policy works, et cetera. This policy took about a year sticking around. Should a decision, again, I'm not a policy guy, turn to Gregg on this one, should have been made, wasn't. So now it's going to be announcement in November, next week, EPA review, and listening to feedback from the industry. February, submissions from different groups, that will, I'm sure a lot of the Corn Growers Association and others will contribute their thoughts, and then decision in June. And here's what I'd like to say to you. What's interesting is you're going to have a lot of earnings calls between then and their decision. And so we've had one guy who's been on the hot seat since that decision, and that's the CEO of Bunge Limited, Greg Heckman. And he did a fireside chat 1 week after. So he's the first guy of the refiners who are building the ability to refine vegetable oils into renewable diesel, and the suppliers. He's on the supplier side. So he's at this conference, and they say to him, what's going to happen? And he said, you know what? I don't care, really. Full steam ahead. All the projections of the growth of the renewable diesel industry, we haven't changed our minds. And that to me was, I always take, CEOs and others of public companies have to be very careful at conferences like this. They really have to be very circumspect about what they say. So when he said something like that, he's saying to his analysts, his shareholders, bondholders, everybody, hey, Bunge doesn't really care what the EPA just announced. We believe this is moving forward. And that's kind of a dangerous position for a CEO to take. It was it showed a great deal of confidence from him. So now what is the consideration moving forward? We're going to have earnings calls for ADM. We're going to have earnings calls for the major refiners. They're all going to get questioned on what's the plan. You, the refiner who announced your $1 billion project, you, ADM CEO, what are you going to do? You've announced additional soy processing capacity, et cetera. What are you going to do? And we're going to get their insight. And right now, the stage has been set by Greg Heckman at Bunge, who said, we're moving forward. And I kind of believe, if I had to handicap it, that the refiners are going to say the same thing. Hey, this feels too popular. This thing's working. Keep your policy the way you want to think about it. It's working. So that's what we have. That's what's in front of us. So.
Walter, you bullish, bearish beans?
Oh, come on.
Yeah, fire it up. Put it on the table.
On beans.
Beans.
Okay.
These guys grow beans.
Could I answer it differently?
No.
Okay. I will.
Gun to your head. You buying or selling? Over the next 12 months.
Here's the setup. And I'll move. I always talk too long, Kevin. I apologize. Here's the setup. You've got this massive increase in Brazil. Brazil is, as has been said, is going to kill it this year. They're going to produce 150 to 154 million metric tons, however you want to measure it, 25 to 29 million metric tons in the prior year. And you're probably in Argentina, you're going to lose 7 to 10 million metric tons there. So the global balance, you're going to have more soybeans. And you think, oh, that's bearish soybeans, right? It is, but it's very bullish soybean meal. It's very bullish soybean meal because Argentina, 50% of global trade in soybean meal originates from one country, and it's on the decline. It's Argentina. So you're going to have a lot of beans, right, coming out of Brazil and hitting the world markets, and you're going to have a shortage of meal because of the problem in Argentina. And that's very, very positive for soy crushing margins. And in my prior career, I've done a lot of work on this. The number one determinant of the price, the biggest contributing factor to the price of soybeans is soy crushing margins. And potentially this year in the U.S., you are going to have extremely outsized positive soy crushing margins. And yes, it's a bigger global balance sheet of beans for sure. But here in the U.S., where we price these things, the soy processor is going to be paying you big basis levels and it's going to be very aggressive in buying soybeans. And so I think the downside is limited from the Brazilian story, and the upside is summer weather, obviously, and then this scenario that Peter started off with of if we're destroying oilseed infrastructure with sunflower production in the Ukraine, it's very hard for me to get negative on beans. So at a minimum, soybeans sort of range trade, in my opinion. But the upside is much larger than the downside.
You running for office or something?
No,
Okay.
I'd lose.
Wasn't sure on that one.
I'd lose. But
Greg, let's switch gears. Greg,
thank you.
he referenced you a little bit. Tell us what your thoughts are on the political side of things, and then where your outlook is on this cattle market.
Well, Kevin, I'm going to try to tie all this together a little bit from my time working with China. 2023 will be the year of renewable diesel. And I want to go back to Peter's comments about African swine fever. So it was in the year 2019, I spent a year of my life negotiating with the Chinese. And they told us on January 1, 2020, so 3 years ago now, they were going to ban the swill feeding of hogs in China. That's what led to 20 million tons of Chinese corn imports. The two most important charts in agriculture in the world today are hog prices in China and soybean crushing margins in China, to your point. What's most fascinating about this second chart, Walter, is if you've looked at soybean crushing margins in China in the last 6 months, they are the most volatile you have ever seen in your life. We have gone from August of record profits to September record losses. And it is a function of what Peter talked about, is you still have African swine fever in China. So you've got hog, this and going on in terms of the hog inventory. It is creating chaos in the soybean market. But I really don't, and then you add on top of that the competition that we're going to have from Brazil. You guys are really going to be frustrated come summertime because the Brazilians are going to be mopping the floor on the export side of the equation. But something very interesting, Kevin, has changed in just the last few weeks here, and that's currencies. We were 2-3 weeks ago, U.S. corn was 85 cents a bushel more expensive than Brazilian corn for February. What is it today? We're almost even. And it isn't a function of anything that's going on in ag. It's a function of currencies and a lot of other things that are changing. So the play here, folks, is animal protein. China continues to import between $2.7 and $2.9 billion a month in beef, pork, and poultry. They are cleaning the Brazilians and the Argentines out of beef. We are going to sell them more beef this year than we've ever sold them in their lives. You add on top of that what's going on in beef demand in the U.S. You add on top of that the end of La Nina, and it's going to start raining. And what does that mean? That means that we are no longer going to be slaughtering cows, and we are no longer going to be putting heifers in feedlots. And if you thought the beef market was tight now, just wait. It is going to be tight as hell for the next 4 to 5 years because of how far we've swung the pendulum on the beef cow inventory because of this drought. Couple final points here. You live in a world today where total U.S. ag exports this year are going to be a record over $190 billion. Why we keep talking about China and agriculture, though, is the fact that total Chinese agricultural imports from the world are going to be about the same thing, somewhere between $190 and $200 billion. This relationship between U.S. ag exports and Chinese ag imports is critically important. And that is because, Peter, I like your term, multipolar world. What we are seeing in fertilizer, folks, is something really interesting. At any point we're watching this, is it's something of a cartel. Brazil, Russia, China, with India kind of interplaying here. They're all talking to each other. When Putin invaded Ukraine, where did Bolsonaro from Brazil go? He immediately went to Moscow. Why? Because he knew he needed fertilizer to make that corn. These countries are all talking to each other in a multipolar world. What are we doing? Is kind of the interesting side of the conversation. By the way, Ambassador Kip Tom, my former colleague, was in Ukraine last week in October. What did he come home and tell us? There isn't a pound of fertilizer in Ukraine. So the point about what Peter made about what happens in Ukraine next year is very interesting. One final point, and this is the policy point, Kevin. You're here talking about ag tech and all of the money being spent in technology and agriculture, which is critically important because our acreage is flat in this country, folks. Our only way to do this is more productivity. And we're going to have the tools to do this. My great fear is, folks, though, and if you talk to Bayer, you talk to BASF, you talk to Syngenta, we were at Kip Thomas Farm, and they all said exactly the same thing that I've been saying is, the U.S. government and governments around the world don't have the capability to approve this technology. The regulatory process is going to bog this down. It is going to be a wrench in the gears. And Kevin, my great fear is that we're spending all this money, but we're not going to get an ROI because the government won't approve this stuff. And that money, Carter Williams' money, is probably going to go somewhere else if we don't figure out how to deal with it.
Makes sense. Good insight, as always, Greg. Mr. Daniels, last on the list until we open up some questions. What do you have for us?
Well, I thought I'd do a brief look back at where we've been and maybe a little bit of windshield time as to where we might be going. Commodities were the best performing asset class this past year. Not all commodities are created equal, but corn and soybeans and orange juice led the list on the upside, and the losers in the commodity space were more consumer-oriented products, copper, cotton, lumber, things that are kind of anticipation of a recession that's right around the corner, in my opinion. It's interesting to look back at wheat. You know, just before the invasion, the Ukrainian war broke out, wheat from then over the next 6 weeks rallied almost 75-80%, and ended the year with Minneapolis wheat actually down 4.5% and Chicago wheat up a mere 3%. So, you know, a lot of the hyperbole of the activity was short-lived, but the emotion of the moment certainly got caught up with the market. And that can happen at any time, as we've seen every time someone shoots a missile at the wrong target, or they stop. Putin makes a comment one way or the other, the market reacts. You know, over the past 4 years, we've seen ags have been up 4 years consecutive in a row. It's almost a new record, due primarily to droughts and of late the war. You know, the funds ended the year long corn, long beans, long meal, long oil, and short wheat, which is kind of ironic because that's the polar opposite, the mirror of my bias, which is pretty much the opposite of all those positions. Index fund rebalancing is going on right now. They're reducing their exposure in the ag world and increasing their exposure in energies. You know, as we turn the calendar, it seems that we have a better handle on what the supply side economics are, but there are more and more questions regarding demand, and those questions focus primarily on China. The impact of the recession that all the countries are going to be experiencing, tributary to the One Road Initiative, and how that will all impact the overall demand picture. Many are expecting that with the reopening will come this resurgence of commodity prices, and maybe we'll get a little bit of that short term, but personally I think that it's a lot of hyperbole and hope, more so than it is reality. You know, as has been pointed out, the hog margins are problematic, crush margins are problematic, and real estate market is definitely problematic in China. I wouldn't be surprised if we do get some sort of a surge, but long term, I don't think it's sustainable, and we don't know where the whole COVID issue is going to end up, and if it's going to create a new strain or variety, but it wouldn't be bullish, it'd be more bearish than bullish, I would think, in that regard. You know, as for corn specifically, I'm more neutral than anything. The global corn production is forecast to be down 56 million tons this year, and that's probably not high enough because you still have Argentina that's grossly overstated, in my opinion, and you don't even have the safrinha crop in Brazil in the ground yet. You know, at the same time, you've seen the global feed demand forecast to be down 21 million tons versus last year. And that's primarily coming out of the United States, where our export sales are roughly 50% behind a year ago, or 18 million tons. So if you assume, and Mike, what would you think the acreage, what are you using for an acreage number this year, Mike?
Well, that's a hot subject. A lot of folks, I was really surprised that we're pushing big numbers, 93 to 95 million. I just don't see that, Andy. I'd be more 91 and a half, 92 with a 88-ish kind of bean thing. The only loser I see in acreage today is probably cotton.
Yeah.
And that will slip over to beans to some degree.
Okay, well, so if you, let's use 92 million as a base point. And if you have trend line yields, you know, you're talking about increasing our carryover 500 million bushels, and add on to that another maybe 200 million bushels that we're currently overstating U.S. exports. And you're pushing up towards a 2 billion bushel carryout in corn this coming year. Now, that's a lot of ifs and whats and maybes, but you kind of have to look at what the market's telling you today and assume normalcy going forward for the for weather-wise. But there are so many uncertainties, and right now I think the market will stay on guard because of the problems in Argentina, because of the uncertainty of U.S. weather, and certainly because the war in Ukraine is going to keep the market from imploding short term. But I think it's more of a paper cut kind of work yourself lower type market at the moment. If you look at wheat, the world ending stocks are forecasted to be roughly 70 days of supply versus last year at 77 days. And putting that in perspective, the last big wheat bull market was 07, 08 when we were looking at 64 days of supply. So we have a fairly tight, relatively speaking, balance sheet in that regard. Generally speaking, the Northern Hemisphere, which represents roughly 80% of all world exports, our trade in wheat, is in good shape, other than some areas that have got the Christmas frost in the hard red wheat belts. But at the same time, our export demand for hard wheat's been down primarily because of China and the lack thereof. So, with the war raging as it is in Ukraine, I wouldn't be short wheat with stolen money, but barring any sort of issue that further takes supply off the market, I mean, we've already pretty much taken down our Ukrainian and Chinese or Russian demand or supply availability. But, I wouldn't be short right now because I think there's just too many unknowns and there are too many black swans out there flying around. As far as the soy market goes, global production is expected to be up 40 million tons between all oilseed crops. At the same time, consumption is forecasted to be up 24 million tons, and meal demand is forecasted to be up 9.5 million tons. I have a real problem understanding how that math works personally. Calling for a record recovery into a recession with the market in a steep inverse, corn feed demand down 21 million tons, and you got the hog and the crush margins issues in China, and the funds are all along the complex right now. It just doesn't add up to me. You can't have feed demand down in corn and up that dramatically in soybeans. So I think it'll be interesting next week when the USDA finally comes out and gives us our stocks numbers as well as our forecast numbers, because I don't think we're going to have that kind of increase in soy demand coming up in the next year. Now, soy oil may have a story for all the reasons that Walter and others have said, and more likely we're going to see a return to normal oil yields. Last year was a record, so just a return to normalcy would probably put a bid under the oil market. So, as the trade goes, I guess I kind of like being long oil share. Particularly after the big break we've just had, and if we start to see more and more of the commercials coming out in support of increased renewable biofuels, then I think that is going to also be supportive. And whether you long oil share outright or long oil share short corn, I think that kind of relationship makes some sense. When we're in an up market, farmers are always the biggest geniuses on the block. The key to success, though, I think, is managing risk, so it can't be said loud enough the importance to have a game plan as we go into this year and understand that there's going to be volatility, the likes of which we can't anticipate, but we know is right around the corner. And I guess that's pretty much all I have to say, Gov.
Yeah, perfect. Let's open it up to some questions before we go to lunch and get the thing moving. Todd, Jordan, anybody text anything? Or if anybody has a question, stand up and say it.
Yeah, Kevin, I'll start off with this one right here real quick. This came in about the time Walter was letting us know that ethanol is not going away. The question is, would we have the ethanol demand if government mandate was not in place?
Walter?
Well, I have to answer that?
Yeah, would we have the ethanol demand? Keep it short.
I can't do that.
Okay.
Here's my thesis. I read a guy who is ringing the bell on saying we have peak energy production for lots of the reasons that Peter touched on, et cetera, underinvestment in Canada, the U.S., et cetera, tar sands in Canada, and shale in the U.S. I believe that we're going to, my personal opinion is we're going to enter into a period of real energy shortage. And so agricultural energy, whether it's corn ethanol, whether it's biodiesel, or whether it's renewable diesel, is going to get priced to produce. We're going to have very good margins. The reality is that the infrastructure is here. It's 10% of the gasoline supply. And so whether the process was the policy right, et cetera, the reality is we need it as a fuel supply. And so it's going to be profitable, and it's not going away.
Kevin, government mandates are not going anywhere. And the reason the CEO of Bunge said what he said is because renewable diesel makes great aviation fuel. So he's got a backstop.
Oh, yeah,
there.
we haven't even touched on that. Absolutely.
So we're
Haven't
all in
even touched on
agreement.
that.
Yeah, I mean, I think everyone up here
Very
is in
good point,
agreement.
Greg.
We think ethanol's, in a good position, in a good place. So, next question.
Back to the comment about Brazil being able to add 400 million acres through deforestation. How's that going to work with the current climate smart programs in place with the very high CI score that's going to tally up?
Be very clear about that number, 400 million. That's not deforestation. That is the conversion of pasture land over to corn and soybeans. I've talked to a few just Brazilian friends. The deforestation we saw in the 60s, 70s, and 80s, this is not happening like it was at that particular point. In fact, if you want to go get an acre of the rainforest, you can only put 10% of it in production anyway, and it's expensive. So that 400 million is pasture land that they'll just convert over. Just want to be clear on that.
And the Brazilians don't care about CI scores.
Particularly Lulo.
Next, anyone?
Will Brazil be able to source enough fertilizer to plant a record safrinha crop?
That's a good question.
That's a great
I mean, I
question.
think
Good
that's
question.
one all of us are interested.
How much of it would they already have bought and have ready?
Yeah, I think they were early buyers in a
Right.
big way. I
Yeah.
think we got the fertilizer panel.
Yeah,
fertilizer.
I would worry more about next season versus this season. I think
Yeah.
they're well equipped today and
Yeah.
well financed.
And the answer on future corn acres in Brazil is all about price. They'll plant a lot less corn at $5 than they will at today's price.
Well, follow up on that. With, if they have weather challenges down there, how much export market share can we stand to pick up in the U.S.?
Well, we're going to lose.
Yeah.
Lose big.
Yeah, we're headed south
The,
relative
the
to that.
Brazilians could potentially export as much corn as we do.
Well, the key challenge for the Brazilians is their productive capacity is far outstripping their storage capacity. And so the reality is this crop, this monster Brazilian soybean crop, is going to hit global markets. The function of the market is the U.S. gets zero exports and the Brazilians get it all. That's really the function. And again, back to my point, that means the residual carryout of soybeans in the U.S. is going domestically. It's going to the domestic processor, and they're going to drop their basis levels and make a lot of money crushing those because they'll be exporting a lot of meal. That's the scenario that I see. But the Brazilians can't store these crops. They don't have the infrastructure to do that. So they're going to hit global markets.
I think, too, he was asking what happens if the Brazilian second crop corn runs into a weather problem? Will the U.S. pick up a lot of export business in that
We'll pick
scenario?
up some that we're already in the process of losing. I mean, we're facing 200 million bushel overstatement in exports right now. So what if they lose? If they have a shorter crop, we have the supplies to give it to them, and that's already on the balance sheet. I don't see it as being a big deal.
We don't talk enough about the sheer size of Brazil. I mean, Mato Grosso's 8 Illinois. The country as a whole is as big as our 48 states, and they've got all this room. So we don't ever want to lose sight of their competition. I do think Greg made a really good point that we don't talk enough about, which is we have to watch currency. I think what Chicago daily futures do is not nearly as important to the grower there as what the Real is doing on a particular day.
Yeah, and I think the issue we run into, and Mike, you and Andy will probably agree. I mean, we've now with the algo trading and more of the computer trading models, going into the South American growing season, a lot of weather risk starts to be added in if we have a tight balance sheet. We saw weather risk added in, but as we transition out, and it'll be too early in the U.S. to have a real weather scare. You're transitioning out of South American weather. well, you're going to lose that weather risk premium that's inflated into the market, or the uncertainty of weather. Correct, Mike? Andy?
Yeah.
Yeah, I mean, and that's what I'm saying as a trader.
I think, Eric's point earlier, I think, is not to be shoved aside. I think the weather is changing. The Pacific waters are warming. The rain in California. I mean, we're going to see, I think, over the next 45 days, a significant improvement in our subsoil moisture situation, which has kept a lot of growers, understandably, from wanting to address new crop. If we see a lot of moisture reserves built over the next 30, 60 days, that has implications, particularly if Andy's comments are correct that the carryout for old crop climbs to 1.4, 1.5 or something. Get 92 million on March 31st and subsoil situation. So I'm not a big new crop bear, sub $6. We're back down to $5.95 this morning. But those are the things I think you have to be careful of. And this goes back to Walter's comment. I'm sorry for stepping on this, but Walter's comments about hedges is the best advertisement for crop insurance that I've ever heard. You know, that's the best way to protect your crop in total, is to buy a subsidized floor that covers your entire farm operation. So that's where I would really focus on new crop protection. And hopefully, knock on wood, we stay with high prices through the month of February.
We got one more good question.
Yeah, we got a bunch on wheat pricing, high water mark for wheat price next 12 months. What's the upside targets, if you would?
I'm a wheat bull. You guys know, right, Andy? He says,
Kevin, I'd hate to disagree with you, because if I did, we'd both be wrong.
Yeah, exactly. Andy always says I've always been bullish wheat. I don't know if that's really true, but we have had some good runs this year in 21, 22 on our wheat side of things, being bullish. I was lucky to get out of a position here lately. I think there is wheat bull potential. I think, as Andy alluded to, I'm probably a little more bearish tilted in corn and beans, which I'm usually not, as you guys know when you come to the conferences. But at these price levels, I have a little bit of more of a bearish bias, I should say, towards corn and beans, and I think a little more bullish bias towards wheat. I think a lot depends on the weather, how this weather plays out, and if we're going to see the drought map improve like you guys are maybe insinuating at this point, it's probably tough for me to be too bullish wheat right here. You guys agree on the panel? What do you guys think?
It'll be the story, right? And we're going to watch the story evolve. And if that map, if I'm right and say it's going to be under 60% by the time we get into March and April, then that will be the story, regardless of what could happen later in the summer.
Yeah.
You always have to ask yourself, if you're trying to price, where's new money going to come into the market to drive prices higher and higher? So I used to always tell the kids, you look at prices like you're rolling a snowball up a mountain, and you need more and more people. The higher you get and the steeper the mountain becomes, the snowball's getting bigger and bigger. That's what's happening as you go up the mountain in commodity with pricing. The snowball's getting bigger and bigger. You have to have more and more people coming in to buy every day, more buyers than sellers. And when you have more sellers than buyers, the snowball rolls back down the mountain in a big bad way. So I ask, where will we have new buyers come in? Most of your money that was betting on the war, they've already come in, they've already taken their bite out, and they've moved to the sideline. Most of your weather players, if you see the drought map reduce, you're not going to add more weather play. You're not going to add more new weather money. So it'll probably back off as well. So you just, kind of envision in your head, are you adding more people to push the snowball higher? As the prices get higher, the mountain gets steeper. You need more buyers. That's why they say every big bull market needs to be fed regularly with new bullish news. I just worry how much is already on the table and priced in at these current levels. We don't know anything that the market doesn't know. I mean, the market knows it. It's pricing it in. So where will the next big wave of new money come into the market at? And I don't know that, Mike. Do you? Do you, Andy? I mean,
Well, it sure feels like you still have a lot more volatility and upside potential just on headline news coming out of Russia and Ukraine. I mean, boring as it sounds, it's because it's coming commonplace now. It can happen, and it can happen quick. I mean, one misplaced missile in a grain tanker, and that's goodbye. I mean, that's going to change a lot. And the funds are short, a substantial amount. They're almost 100,000 right now. So, you know, them just getting even would take you up considerably. So, you know, it would be more of a unforeseen event that would trigger it, but once it's triggered, I mean, hell, you look back to wheat this past year, we got to a point where you started to see the front months in wheat back in March, the March and the May contracts went to these massive premiums over September and December. And they did so because there were no sellers left. And you have these index funds that they will do it exactly on the dates that they prescribe to do it. It doesn't matter if wheat goes up $20. So all the spreads got out of whack and the price relationship, because it got to a point where the index funds, who normally don't really matter to the market direction, they're just there kind of tagging along, became an influencing factor on the front end because everyone else blew out and they wouldn't move and they wouldn't budge until the dates of their charter saying they could. So, you know, you can get volatile moves, and particularly in wheat. I think it's probably the most volatile I see right now.